Hi, my name is James Chan. Welcome to Money Matters TV. I'm your host for this episode of Money Matters TV, and I'm going to have my friend Doug Hepburn as our guest. Before I speak with Doug Hepburn, I think I need to read a mission statement, and it's better because this is kind of not exactly legal statement, but it behooves me to read it precisely as it is written. So just please bear with me. It's only a few seconds. Doug Hepburn specializes in working with business owners to help them make smart decisions about their money. He is an investment advisor representative of and offering securities and advisory services through Cetera Advisors LLC, a broker, dealer, and registered investment advisor, member of FINRA SIPC. Cetera is under separate ownership from any other named entity. There you have it, Doug. It's very good working with you again.
It's great to be with you again too, James. Thank
Yes.
you.
Yeah, I still remember you're calling me when I was in Coimbra, in the central part of Portugal. I said, "Who's calling me?" "Oh, Doug, what are you doing?" So, how are you doing? How are you
I'm doing
doing?
great, thanks. In
Yeah.
spite of some of the turmoil that we're seeing in the world today
Oh,
and at
that's
home,
amazing.
things are going great. Thank you.
Really amazing. Now, what do you do for small business owners? Tell people about your business. What exactly do you do for them?
Well, thanks for asking. When we work with business owners, we principally work in the areas of business continuity and retirement plan consulting.
Okay.
So oftentimes, when business owners are busy working in their business, they're oftentimes working in it as opposed to on it,
Mhm.
and in order to generate revenue. And a
Right.
lot of the things that should be done but aren't done or sort of fall by the wayside. One of those is continuity. And what I mean by that is, just suppose something happens either to the owner or some of the key people. If there's no backup plan for those people, then it can create a bump in the road. We're
So
seeing that now in a lot of businesses. I mean, we saw it a year ago when people were shut down, but also, people who got sick with COVID.
right. So Doug, you are not talking just about succession planning. No, not just that, right? Not just that.
Not just succession. I mean,
Right.
continuity involves a lot of
Right.
things. It's just
Exactly.
making sure that the business continues to run
Right.
without the key people for a certain period of time until such time
Correct.
as they can either be replaced
Yeah.
or they come back.
Right. So what are some of the, if you can name, let's say the most important issue which your clients, the small business owners face, what will that be? The key one, the one most pressing.
Well, and again, it depends on the situation. One
Okay.
of the things we find is that if you have a sole proprietorship, for example, or
Right.
a single owner, there oftentimes isn't somebody lined up to be able to take that business over in the event that the owner is either sick, becomes disabled, or decides to retire or
Yeah.
dies.
Hmm.
And
Hmm.
so having that kind of continuity and plan in place is very important. The other is, if you have more than one owner, having either a shareholders agreement or a members agreement in place that's going to cover those kinds of contingencies is critical. And also the funding in the event that some of the buyout triggers are triggered.
Yeah. With the economy going the way it has been, and particularly in the past couple of days, the stock market has fallen a little bit. I mean, not dramatically. So, what, what do you think will happen? Particularly, let me just focus on inflation. We are all kind of quite edgy. I mean, as if the pandemic has not made us anxious, but
Of course
inflation is
not.
a key topic. Say something important, clever, and practical to the audience, for the audience.
Certainly. Well, you're absolutely right. Inflation has become increasingly concerning to many people. And the reason is that, when we went through the shutdown last spring, a lot of companies throughout the entire supply chain weren't producing anything, and that created a disruption. As a result, when companies got back into business and were able to produce, it took time to sort of fill up that gap in the supply chain. As a result, people were trying to buy things and bid up the prices. Perfect example. If you look at pressure treated lumber, for example, the companies that make pressure treated lumber, they stopped producing it because they weren't considered an essential business, and then everybody was shut down. So what did? They did work on their houses. They went out and bought all the lumber they could, the paint, everything, and went and did work at home.
Yeah.
And so prices got bid up. Pressure treated lumber tripled in price over the course of about 4 months. Now, at some point, the supply chain is going to catch up. The producers are going to begin to fill the marketplace with goods, because if prices have gone up that much, then one would imagine that there are significantly more profits to be earned. Yeah. And if there are multiple suppliers, multiple competitors, they're going to flood the market with goods, and prices should come back down. I say should because it all depends on the market and how many competitors.
Yeah, with inflation on the horizon, we don't know how much, how little, or how even or uneven it may be. I think maybe this is the time to also kind of connect it to the stock market. Perhaps, Doug, maybe this is the right moment for you to answer a question in Philadelphia from Thomas Gallo. Mr. Gallo has a question on how should I plan for a down stock market, which I think is a very good question and very relevant, wouldn't you?
Yes, it does. It certainly applies to the current environment. But one thing that we have to keep in mind is that, nothing moves in a straight line. And of course, the stock market is going to have its ups and downs, and that's actually a healthy thing. In fact, the market has a tendency to correct anywhere from every 1 to 2 years. So a correction is not a bad thing. It's actually just a repricing of assets. From an inflation perspective, though, inflation generally is a good thing as long as it's a small amount of inflation. And we talked about some of the raw materials pricing. The Federal Reserve is targeting somewhere around a 2% inflation rate. And the reason they've done that is because for years we ran the risk of deflation, declining prices.
Right.
Think about it for a second.
Right.
If it costs $4 for a Big Mac today, but it's going to be $2 3 days from now, are you going to buy it today, or are you going to wait 3 days from now?
Yeah.
Well, when you have price destruction like that, that's not a very good thing. So a little bit of inflation is good because it keeps the economy growing. It's when inflation gets out of control that people get concerned.
Yeah, I remember I was in the United States in the 70s, and in the 70s, inflation, even in the early 80s, it was still shocking. It was really shocking. Do you think that we will kind of go to that? I hope not, but
goodness, I certainly hope not, because that would be it wouldn't be good. Now, generally speaking, the Federal Reserve has done a good job of keeping inflation under control. As you recall, back when we had double-digit inflation and double-digit interest rates, Paul Volcker, then the head of the Federal Reserve, raised interest rates even higher, and he became known as the slayer of inflation, because we went from double digits down to 3% inflation.
Right.
I don't know that we want to see that anytime soon, because as the economy heats up, the Federal Reserve has a tendency to raise interest rates, and when short-term interest rates go higher than long-term interest rates, generally the economy slows down and potentially runs into a recession. I don't think anybody wants to see that right now.
Right. So back to Mr. Gallo's question, Thomas Gallo. So you basically advising Mr. Gallo and people who are thinking of the same topic that they should stay the course, have self-discipline, or bank on their financial advisors to keep them calm. Is that really in a nutshell?
Well,
What you?
with a question like that, the answer is always it depends,
Yeah, okay.
and it depends on his personal situation.
Okay.
And when you talk to any financial advisor, they're gonna tell you there are three major components that you need to consider. First is risk tolerance.
Mhm.
How much volatility can you afford without being up at night? The
Correct.
second is time horizon.
Uh-huh.
How long do you have until you actually need that money? I mean, if you're buying milk and bread next week, you obviously you don't want it in the stock market.
Right.
But if it's something that's for retirement, that's 10, 20, 30, 40 years from now, maybe you can afford to take more risk. And the third is the objectives. What are the objectives for that money? Are you using it for retirement? Are you using it to buy a vacation home? Are you using it? Is it just play money? That you like to put into the stock market and see if you can buy some winners. So those are the three big things. My recommendation for anybody who has concerns that the stock market may be going down is first, go through those three questions, look at what's in your portfolio, make adjustments if it makes sense, but also at the same time, continue to build up cash from income so that if the market does go down, you have an opportunity to buy.
This is very good advice, Doug. I'm going to just review this advice myself after the show is over in the next few weeks. Now, maybe this is the best time for me to tell our viewers that here is how you send in your questions to Money Matters TV.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back to Money Matters TV. I'm your host, James Chan of Asia Marketing and Management, and I am now with our guest, Doug Hepburn of Hepburn Financial Advisors. Hi, Doug. So would it be possible for you to kind of cite, you don't have to give names and company names, of a very interesting or intriguing client situation that you have just helped resolve that would help people kind of understand, some of your work?
Well, that's a great question. So there's a couple of situations that come to mind. First is, one client who had a key employee, and he really wanted to keep that employee engaged in the company, and was actually considering giving up some ownership in the company.
Mm-hmm.
The problem is, once you allow minority owners into a company, it can be more problematic down the road. So oftentimes, small business owners, they want to retain control, but they want to be able to retain key people. So one of the things that we did was we evaluated the current benefit structure and looked at things that would benefit the key employees as well as some of the other employees, and make them want to stay a little bit longer and be more invested in the company. In other situations, we've had individuals who felt that it was time to retire. And so we worked with them to find the right people, the right investment bankers, to help them market the company and transition out. But without a clearly defined plan, the client wouldn't know, one, how much money they needed to retire, and two, what they need to sell the company for to be able to achieve that after taxes. That's a critical number for anyone.
Yeah, yeah. I mean, what you have just said reminds me of yet another situation that I lived through in my career, which is an owner who was so devoted to his company, to his own personal mission. He wanted to retire and he wanted to sell the company, kind of, in a year or two or three to a younger person. And yet, after he had hired the younger executive, he kind of didn't want to let off control, if there is such a thing of saying, if I'm getting it right. And so finally, they had a fight. So it seems to me, in a nutshell, some business owners, particularly people who created their own businesses, their business is their identity.
Absolutely.
And they can't let go. They may just die, but they cannot sell. They cannot give it to another person. It's almost like it's their child, it's their identity, it's their religion.
Maybe.
They can't hop from Buddhism to Christianity in a
Yeah.
heartbeat.
Yeah, you're absolutely right. As a business owner, it's very difficult to give up something that you've created, and oftentimes business owners feel that their business is worth a lot more than it really is. I mean,
Right.
the value of a business is only determined by what a willing buyer and a willing seller are able to agree on.
Right.
And
right.
so that's why it's important to know what that number is that you need in order to walk away smiling. And it may not be what is in the owner's head, which could be 6 times earnings or whatever somebody else in the same industry got. Everybody has these rules of thumb, but we all know about rules of thumb. They're great things to talk about at cocktail parties, but they really don't mean anything when the rubber hits the road.
No. The story in my case, the story ended up with the aging owner finally retaining complete control of his company. So his earlier idea of selling it was really kind of like an aberration of his mind, a delusion.
Right. A mirage.
A mirage, self-created, of course.
Yes.
Now, Doug, I have a out of the blue question. Do you have international clients? Do you actually, help business owners who are not Americans and who live and work outside of the U.S.?
Well, for regulatory reasons, it would be difficult to do that.
Okay.
But certainly, we do work with expats that come to the United States and are working either with, large IT or pharmaceutical firms,
Okay.
or even start their own businesses.
Okay.
So, but once somebody moves overseas, it's sort of difficult to have a location overseas. As you can imagine, the barriers to entry are high and the costs are significant.
Yeah. So, do you find actually among business owners and entrepreneurs, do you find that your clients happen to be the baby boomer generation, the millennials, or even younger?
That's a great question. It spans the entire spectrum. But generally, a lot of the clients that I see are either baby boomers, successful business owners who have, built from the ground up, been bootstrapped their businesses for years, made it successful, and now they're either ready to turn it over to their family, their kids, existing management, or a third party. And when it comes to a third party, it's critical to find the right one, because obviously a strategic buyer, somebody who has a plan for your business and has it fit in with theirs, is going to pay the most money.
Well, this is really a fascinating topic. You have any other interesting experiences or advice to business owners, small business owners, who are really the your bailiwick, your wheelhouse. I mean, these are the people that you help. You give advice to. Any other specific idea that you want to mention for the audience?
Oh, absolutely. I think there are a number of good things to remember. So, for example, Stephen Covey once said, "Begin with the end in mind." It's very helpful to know what it is that you're trying to accomplish, and keep that in mind, because as a business owner, it's
Doug,
easy to get stuck in the
sorry,
business.
I have to interrupt you. I just want to clarify. Have the end in mind. When you say end, you don't mean death, dying. No, you mean your objective. One's primordial or primary objective. In other words, don't get distracted.
Correct.
Okay. Yeah. Sorry. Just to make sure.
The business, well, a business can live in perpetuity. A corporation, if you will, can live in perpetuity.
Yes. Correct.
But the owner can't. So at some point they have to plan on who's going to take that over, or who's going to be the last one to turn the lights off.
Right.
So having those plans up front is very, very important. The other component is, regardless of your business, whether it's virtual, or it's a manufacturing concern with a lot of machinery, or it's capital intensive like a real estate business, the human capital is something that doesn't show up on the balance sheet, and that's the people, the nuts and bolts of the business that really make it work. And so if you have good people there, you need to be able to take care of them so that you can retain them for the long term, because they really add a lot of value that doesn't necessarily show up on your financial statements.
I really find this very important. It's almost sage-like. This is so, to me, so fundamentally important. And yet, let me be a tad cynical. Do you think people really understand the value of this idea, or they just say it so that they look good? They look ethical, moral, benevolently paternalistic, if you know what I'm saying. I'm trying to be cynical. Sometimes we all have to be a tad cynical, because the world still, after all, is a jungle.
Well, I think just because of demographic changes over the years, it was easy for employers to think that people were easily replaceable.
Right.
Because again, back to economics, supply and demand.
Expendable.
Yes.
What a dirty word.
Expendable. There's a greater supply of labor than there is the demand for it. So you can take anybody off the street and put them in a job and train them. I think that mentality has changed. I think the demographics have changed, certainly in particular age groups, and we're seeing that. Particularly nowadays. I mean, if you look at the restaurant industry, for example, it got decimated in the shutdowns, and they were only operating at 50% capacity. I went out to dinner the other night, and it took an hour for us to get our cocktails and hors d'oeuvres. Needless to say, we left, and we weren't the only people who left. And the owner came out, apologized. We told him, look, we're going to come back, but right now, and all because he couldn't get enough people to run his business, because people were, getting $300 a week extra in unemployment benefits. They can make more money sitting on the couch than they can either washing dishes or serving tables. So, that's really a commentary on the unintended consequences of government intervention. The market's going to correct itself, but as soon as the government gets involved and creates disincentives to work, people aren't going to work.
So do you really see some people who are not willing to work because they think that they can subsist on government money? you think?
Fortunately, none of my clients.
Okay.
But
yeah.
and nobody that I know personally. But these are
Right.
the anecdotal stories that I hear from
Yeah.
business owners that I talk
Sure.
to
I see.
in various industries,
Right.
whether it's the hospitality industry, manufacturing, industrial businesses. Getting people at the lower end of the pay scale has been
Right.
challenged.
Right. Well, Doug, I think that we may have just 2 minutes or so. And before I mention our next guest, would you like to have another advice for people who really might be looking for help, just like the one you can offer, to small business owners? I mean, what should they expect for in the near term?
Well, in the near term, I think once the high school kids and college kids are out of school, I think they're going to come back and start working in restaurants and fill those hospitality jobs. I've heard stories of business owners having to raise wages above the quote unquote $15 an hour target by some people, and I think those wages are probably going to moderate a bit because you have a number of people who are in school who aren't eligible for unemployment, so they can go out, take those jobs, and so if you're hoping to go to a restaurant, I think June, July might be better than right now. You have to wait till school's out.
Yeah.
Um,
Doug, I sorry for the interruption. Suddenly, this very second, I have another slightly off the wall idea. Not much time, but among the clients you have served over the decades, or colleagues whom you know, answer this question.
Okay.
Do most business owners have a college degree? In short, would there still be a percentage of business owners who really didn't go to college but still succeed as entrepreneurs? You get my question?
Absolutely. I mean, think about it. Some of two of the most successful college dropouts
Right,
are Bill
right,
Gates
right.
and Mark Zuckerberg.
Okay.
And they dropped out of good schools and they were very bright people. But there's still a lot of people who never went to college who have great street smarts. They know how to run a good business. They know how to treat their people right. And I think that's probably most important.
Yes, I really believe. I mean, I love education. I love knowledge. I have all the degrees I can get, but yet I still feel a good business person doesn't have to have a college degree. I mean, there's nothing wrong with having a college degree. There really should be those people, and they should make up a healthy proportion of all entrepreneurs. Well, in any
Absolutely.
case, yeah. Thank you, Doug. If you don't have anything pressing, important you have to say, then I want to tell the audience that our next guest is going to be Michael Gitluski. He is the owner of Achievement Unlimited. And thank you very much for watching Money Matters TV. I'll see you soon.